Okay, folks, so we are joined today by Chris Lawry, who is a world champion and has featured in the Olympic Games no less than 4 times. But this isn't in the world of financial markets trading. Yet anyway, we're talking about bobsleighing. However, Chris Lawry has also been in foreign exchange trading professionally for 18 years and is living proof that you can excel in 2 unrelated passions simultaneously: bobsleighing and trading. Now, who would have put those 2 together, huh? Since moving from Canada to Singapore, Lawry has metamorphosed into a full-time fund manager where he trades for a private handful of clients in addition to running his own book. Welcome, Chris. What an interesting life you lead.
Thank you very much. Thank you very much for having me. I appreciate it. Yeah, it's been an interesting life. While I was in sport, it's always weighing on your mind in terms of what course of action you want to take upon retirement. I retired when I was 35, but through the period of when I was in sport, I was studying the financial markets, and I was, I graduated from university, and I'd taken some courses, some of the Canadian securities courses, because I'm Canadian, and then I just wanted to be in an independent business, and I gravitated toward trading, and I enjoyed the psychology of it, and then just invested a few years up front. I retired from sport in '98, invested a few years up front, and went from there.
Wow. So, I mean, with sporting as well as trading, I mean, would you say that a lot of similarities? Would you say that trading essentially is like a sport in terms of the transferable skills you've taken from bobsleighing to trading?
Well, what I found was interesting was that once I engaged in the process of building a trading psyche and building a trading persona, call it, was that I quickly found that all that I had endured on a psychological or on a mental level in sport, that it was directly transferring into the process of developing as a trader. And so I never actually realized it until I had engaged in this new endeavor. And so I guess the point I want to make here is that whoever it is that you have engaged in a process that has developed you to become quite proficient in your specialized area, whether it is in alignment with your natural gifts or whether it is not. You've had to go through a process to refine a skill to perfection. And so when I understood this, I started to take all of my experiences and understanding just simply process thinking, focusing on the task, internalizing, like reflecting and internalizing your experiences. Then that's when things started to accelerate quite profoundly, because in trading, the goal is not to copy what somebody else does, not to try to take on somebody else's persona, not to take on somebody else's just because they have certain characteristics that help them succeed in trading. Doesn't mean that the same is going to apply for you. In fact, I'm quite certain that it's not. That you need to find your own uniqueness in the process. So it's very important to understand this conceptually as you start your endeavor into trading, because you're going to learn it sooner or later, and it's important to have this factor known so that while you are engaged in the process of developing as a trader, that you're aware of the direction you're headed as you focus on the developmental aspects in the early stages of trading.
Well, I can imagine that you are now currently a very different trader to what you started off being back in 1998, and that's true of a lot of people. I mean, when I first started trading financial markets, I fancied myself as an all-guns blazing intraday trader, and guess what? I really crashed and burned, and I gravitated towards the end of day, end of week style of trading, which has worked for me ever since. So I imagine a similar kind of story for your good self.
Yes, I mean, we all start out with a blank slate, and then you go through a discovery period, and then through that discovery period, you kind of figure out, where your skill set is. And, I think what's important is understanding your strengths and gravitating toward your natural thought processes and your strengths. So now a strength is not to be confused with the desire for action and the desire for monetary gain. So the focus when you're developing as a trader, the power is in the financial gain and that which that brings. But if you're focusing on that, it is only compromising the natural process of what really needs to be done at the core. So if your goals or your orientation is towards, I gain satisfaction in the fact that I am growing in trading on a profound level, where I'm gaining a deeper understanding of market structure, of the fundamentals, lining up parameters that weigh probability in your favor, and overcoming psychological challenges that the process will emerge, that the process will have emerge before you while you're learning, and overcoming those challenges. If that's the goal, then you'll be successful. If you focus on the task, the end result will take care of itself. So you need to completely get your mind off of the financial gain and engage in the process. So, for example, every article ever written on trading, every book you ever read, they all say that you have to have a trading plan. So does that mean I just give you a trading plan, and if you follow this trading plan, which I've carved out based on how I think, if I give you this trading plan, does that mean you're going to be successful? Not at all. Zero. So the trading plan is an emergence. It's an emergence of engaging deeply in a developmental process. So what you have to plan is you have to plan your development. So, for example, because people who are listening to this interview, some might be algo-oriented, some are mathematical types, some are fundamentals, some are price action, visual. So the spectrum is virtually endless. So what I'm saying is this, is that you need to break down how you're going to develop as a trader. So, for example, just go out and read books on, let's say, fundamentals, aspects of how certain fundamentals drive market volatility. Get in front of the charts and have, like, for example, what I do with my members is I put them through exercises. They put them through exercises so that they can gain an intimate understanding of price behavior at the most intensive level. Because, so for example, what I had done is I had gone to, so I understand all aspects of price delivery into the market, and because I've, based on my relationship with the banks, I've had an opportunity to talk to a lot of the dealers, and then of course a lot of the back office programmers, to get a sense for exactly what happens with price delivery, of volatility in relation to available volume and things like that. So what I do with our members is I've done all that work. So I take what's important and what they can build a relationship with in terms of aspects of price behavior, and I say, okay, do these exercises, watch these price behaviors, and after you've done 50 exercises or 100 exercises in relation to this price behavior, you're going to have a very deep understanding of, why price moves like this and what you can potentially anticipate from this type of movement. So over time, what happens is you're blending, you're merging their unique psychological profile with that of market structure and market behavior. So they are gaining an experience. So you've just given them some guidance. They're gaining an experience with the market that they can internalize, and it becomes their own. So once you've done 50, 100, 200, 500, 1,000 exercises, the market now lives within you, and you ultimately reach really what I believe to be the goal that you want to achieve to be successful in trading and that is becoming an independent thinker.
Yeah.
Once you are an independent thinker, that's when your trading really starts to take off. And it's not when you're depending on your moving averages to confirm and double confirm and triple confirm, and it's when you become an independent thinker, that's when things fall into place, because you become because you've built enough experience based on a specific set of parameters that give you the confidence that you understand the market based on your uniqueness and how you think. You don't need anybody else's validation as to whether or not your trading model is working. You don't need it, because you know that what you know will work.
But a lot of people need that, don't they, when they're starting out? I mean, a common mistake for a lot of people who not just are at break-even, but people who are complete rookies, they'll take to the forums and the chat rooms, and they'll blow off a lot of hot air in terms of like pontificating about where they think the British pound versus the US dollar is going to go today. Funnily enough, they'll never talk about their losing trades, but they'll just talk about their winning trades. Yeah. And a lot of the time, it does seem like a bit of an ego contest in public forums. And like you say, I think being unconsciously competent is the level to be, and everyone has their own kind of fuse, if you like. Some people, certainly who I've mentored, have got it within well, maybe not days, but weeks, months. But some people, some of the smartest people in my clientele have taken years to get it. So it's very difficult to prejudge a characteristic. Sometimes the least likely people really get it and run with it. And that's the great thing about trading.
Absolutely. Some of the best traders I know have no college education. They're just, you just don't know who the one is that's going to really succeed. So you've got the whole spectrum, and you cannot pick the ones that will succeed and the ones that won't succeed. And like you say, going out and exploring, I have what's called a developing traders model, where it just kind of walks through how people generally will go in their exploration of trading and then their overall development. And what I call the exploratory phase is what you referred to, is people are going to go out to chat rooms and they're going to try, they're going to go and get all the material they can for free. And what amazes me is that they'll burn up a $5,000 account, but they won't pay $100 for 300 hours of content.
It's bonkers, isn't it? People, it really is an interesting study of humankind, this whole thing. People say, hey, I will pay for membership or subscription on a trader education portal when I start making money, and I'll pay for it out of the profits. Well, they've got the wrong end of the stick, huh? It's laughable. But it's generally, funnily enough, actually, I've noticed this kind of gender trait. And I'm sure you've come across the guy, Elder. Come into my trading room. He did an experiment, men versus women, and his conclusion after a lot of monitoring was that women actually make better traders because the ego is removed.
Yes. In fact, I found that on a percentage basis that females generally succeed more than males.
There we go. So hopefully, to all you ladies tuning in, take that as a testimony to you getting started, because it's an overly dominated industry with males, and you can see it in Canary Wharf, London, where I'm from, and it's very empowering to see kind of like women traders certainly coming through our ranks at the Lazy Trader. So would you say, Chris, that your trading style, I know that you've got quite a focus on price action based trading, but would you say that 80% of it's based on what you see in the chart and 20% fundamental, roughly speaking?
So I basically have three models, and the intraday model is really solely price behavior, price action. And now that's not to take away from the fundamentals, because naturally we're watching the volatility, and we have we've got a very competent understanding of what's going on fundamentally. But the intraday The intraday model is based on price action. The kind of the medium term model, which is kind of a swing model where trades can go from, let's say, 24 hours to a few weeks. That's based primarily on price action, because usually this price action that we're looking at leads to fundamentals. And then the long-term positions that can go from, let's say, 3 months to more than a year. Those are, of course, there's a solid fundamental framework, but really the primary decision is going to be based on what price is doing on its relative scale. So in other words, on the daily or weekly, monthly chart. So, but the way we break it down is we're watching the price behavior. But the price behaviors that we pick up, we use kind of it's called fractal concept, which is, not to sound too fancy, but fractal is simply patterns of similarity on a reduced scale. So in other words, because see, volatility is a function of liquidity. Okay? Volatility is a function of liquidity. So for example, when you see a data release, and the data release is viewed as positive, let's say US dollar, and you might think, well, why is the U.S. dollar selling off? Well, that's because the volatility in the price movement is a function of liquidity. So, for example, why is it that price moves both up and down throughout the course of a day? Does that mean that the market had the view that it should be rising during this time period, and it should be they've changed their fundamental view, so therefore it should be falling during the next hour and a half? It's a function of available liquidity and the movement of liquidity through the market throughout the course of sessions, as well as throughout the course of a week and a month. So my trading is really just based on I think it's as once you understand it, it's really fairly call it simple structurally, because we're really just dealing with just linear patterns on the chart. So really the model is primarily price based. I don't have any indicators on my charts at all. I just have some
pretty patterns,
horizontal lines.
Good. Well, here we go. There's another example of someone who doesn't use indicators, and I think a lot of people, they really go down this kind of rabbit hole of indicators, and they forget that price is actually the leading indicator when it comes to what you see on the chart. And I've had endless conversations with people who are always saying, what do you think of MACD, or what do you think of this special stochastic setting? And I just look at them with kind of mild disbelief, thinking, look, the most important thing is actually the price at the time, at the moment. And you've got it. Look.
Yeah. I mean, I believe in what I do, and it's validated itself over many, many years. And but I want to say that I would not discount any way of trading as long as it works for that person. So because there's such a broad spectrum of basically every individual in the market is unique, and every individual can come up with a model that's profitable for them. And what they use, some people use, when the moon passes Venus, they say it's a long-term trade for, the euro, or you have no idea how some people, the reference points that they use.
Yeah.
And so if it works for them, then great. But it's important to go through the exploratory process to figure out sort of how you think and how internally and emotionally what your condition is that's going to match ideally with the market space. And I want to say this is very important. If you were to take, like, just visually, if you were to take like a 1 meter circle, okay, and you're to just put a tiny little pin spot on that 1 meter circle, if that's your avenue into the market, that's all you need to know. Okay, so you can understand what the market aspects that are contained within the 1 meter circle, But all you need to do is, if you've got that tiny, tiny little hole to go into the market to take money out, that's all you need. So you don't. A lot of traders want to be everything. They want to be fundamental and algo and the mathematical and the price, and so they want to know everything about everything. But as long as you're the master of your one thing, and that's your avenue into the market, that's all you need. Okay. And really, and you stick with it and understand it better than anybody else understands it, because you understand you, and you understand the means by which you are going into the market to access money. And that's what we work to train people with some of my services. And it's just very important that you find your uniqueness and become an independent thinker.
Excellent. Well, that is a great kind of insight, because a lot of people, they do inadvertently, myself included, back in the day when I was stumbling around in 2007 when I first discovered this fantastic industry, I thought there was the holy grail, and all it would take was to buy, say, euro-dollar at 6:30 in the afternoon on every second Friday of the month. But unfortunately, a reality came crashing down, and I realised I had to work a little bit harder than what the marketing I was lured by suggested. So what top tips would you recommend people who are currently breaking even? I know there's a lot of material out there for people who are unprofitable, how to stabilise, but specifically for people who just need that little bit of a push over the line.
If somebody tells me that they're a break-even trader, I think it's amazing.
It's great, isn't it? It's underrated.
I think that is fantastic. You are just one small tweak away from really making it, and that difference between being break-even and not might just be, it's not necessarily something mechanical that you're doing to interact with the market. It may have something to do with your emotional condition, your psychological condition, and there may be a roadblock in your psychological condition. So for example, the three main things that I would say to any trader is, you need to engage in a development process, not a trading plan, but a development process that's going to result in a trading plan. The goal is to become an independent thinker. And then the last one is answering your question about a break-even trader is we have a model where an equity management model where I use for intraday trading, I use average gain to loss ratio. And but the equity management model really is and everybody needs this. Okay, you need a model that's going to protect you from yourself. So when we would start like a new client or start a new type of account or trading profile, we build equity. We take extremely small risk, and we build equity really slowly at the start, so that the equity. What's important is the equity volatility is as low as you can possibly get it. So you build equity very, very slowly. Then you're very slowly transferring the risk into the built equity. And there's a process that we use to do this in terms of understanding. Let's say we break it down to monthly, weekly, daily. So when we take our first trade in a day, because we only take one or two trades, maybe three at the most, but you start out with building equity on the first trade and having a certain percentage of it used to protect equity on the second trade, but you're already using very small risk. So the point is, without being able to explain it non-visually, the point is that you want to build equity so slowly that you're protecting yourself from yourself. Because once you start breaking equity barriers, then what happens is the natural human mind will say, well, I'm losing money, therefore my trading model is weak. When in fact, it was the brain that said, take this much risk on this many trades. And it was the brain that deviated from the risk model. So when in fact, what I typically find with traders is that their trading model is actually very proficient. But the brain says deviate from the equity, then the account starts losing. So they blame it on the model and not the brain that made the decision to deviate from the risk parameters. That gets pushed aside. So what we do is we create an equity building model that protects you from yourself. And if you deviate from it, you're going to know it.
Fantastic. Get a punishment, huh?
I think everybody needs to have like self-protective mechanisms like daily loss limits, or how you deal with X number of successive losses or X number of percentage losses. You need to have coping mechanisms. For me, it's just time away. That's it. Stop live trading. I can get back into the exercises because the exercises make you intimate with the market, and then you slowly build back again. You don't come back. You don't come back with heavy position sizes. You come back, slowly and what is appropriate for the time. But everybody needs a self-protective mechanism by which they deal with the downturns in the market, and you are going to have them, and they're never going to go away.
And here's a testament to people who are at top of their game, are not infallible. Everyone has even Tiger Woods, who's top of his game in golf, he still has a coach. I have a coach. You have your mechanisms, Chris, when you go off piste. I'm trying to think of the bob-sleigher equivalent here, but it's not coming. But thank you for your time. I mean, surely a lot of people who are listening will want to find out more information. So where can they find you, Chris?
We're not big marketers, but I've got a website called protradersclub.com. And there's not a lot of information about the service on the site, but once you get in the members area, there's a massive amount of information. I do also have a course that runs about 60, 70 hours, but it's not actually publicly posted. You have to ask about it. And one person said, that's too much time investment for me. I'm like, well, you're probably not going to make it as a trader. And, so that's the I have Pro Traders Club. I do about three reviews a week. It can involve teaching. I show them recorded live trades. We do exercises. I'll do live sessions with the group. I share the position trades that I'm in, and I go into all the details as to why I'm in the position trades. And so really, but a lot of it's a combination of everything: intensive training, question and answer.
Fantastic. So they've got it all. And all they need to do is go to the website and drop you an email or sign up on the website, and then the doors to this untapped quantity of information will suddenly unleash itself.
Yeah, there's a lot of content in there, and so
excellent. Well, fantastic.
Great.
This is Chris Laurie. Thank you so much for your time, Chris. It's been a pleasure talking to you. Send my love to Singapore.
I really appreciate it.
You're welcome.